Hi and welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets for Thursday the 20th of February. We've actually had a lot going on overnight. Started off yesterday with the Fed meeting minutes at 7 o'clock GMT last night. Now that actually had a very slight hawkish leaning, with a couple of Fed members actually discussing or wanting to discuss raising interest rates in 2014 or the back end of 2014. So that hit stocks into the close, and the US markets fell. Then the Asian trading took over, and there was a disappointing widening in the Japanese trade deficit. That was then followed up by yet another disappointing number out of China. The HSBC Flash PMI data fell to 48.3 for China. That was down from 49.5, which was the expectation, and that has certainly hit sentiment in the region overnight. Stocks falling. There's been a flight to the yen once more, yen strengthening, which has pulled dollar yen lower. That certainly hit the Nikkei as well. So what we're seeing in the early hours of trading in the European day is certainly a bit of weakness that we've come to see. The DAX is down well over 1%. The FTSE is down 0.6%. CAC's down about 0.75%. So yes, certainly some taking profits following the recent gains in these European markets. The outlook for today, it started off even in the early European trading, disappointing PMI data for the flash PMIs for the Eurozone. French flash PMI was down and disappointing, 48.5 for the manufacturing, 46.9, both missed estimates. Sorry, 46.9 for the services, both missed estimates. And that has hit the euro. German flash PMI data was fairly mixed, but certainly the disappointing French numbers have not helped the euro this morning. The main outlook for today, once the PMI has actually calmed down a little bit in the European trading day, is this US inflation data that's at 1:30 this afternoon. It's expected to be actually improving very slightly back towards 1.6% is the expectation, up from 1.5 last month. And if you see that chart that I've just brought up, that is still showing that a fairly rangy period between 1 and 2% there, so fairly middle of the range on the US inflation data. But any sort of uptick in inflation should help support the dollar, and that could help to bring euro dollar lower, cable lower as well. So just watch out for that today. The chart of the day that I've got is actually on US stocks, as I spoke about earlier. We've seen a bearish key one-day reversal on the S&P 500. Now that has actually happened just underneath the all-time highs, and you got that resistance at 1850.84. That bearish key one-day reversal that we've seen, where the trading day makes a new high above the previous day to close then below the low of the previous day. We saw that 1847 was the high, and then you had the Fed meeting minutes that came out, and we saw a close well below the previous day's low. Now on the intraday chart, you would say that there is a very small top pattern in place here. I've got this up on a wide basis just to show how it almost got to the day to those all-time highs, but then rolled over, and now you've seen what I think is possibly a very slight top pattern in place there, on a move below that 1834 level. That actually gives us a downside target back towards 1820. 1826 was 1827 was the low yesterday. So you could see further downside correction back towards this consolidation area here. 1809 was the low, was that key low within that bull run. So that could well be seen a pull back into this consolidation pattern here, between 1810 and 1820. I would say that is perfectly possible. But if you look on the daily chart, but once again, I think this is just a correction within this big uptrend channel that we've got going on. I think it may well start a near-term correction, but I think with all these moving averages turning higher, I think that would suggest that that the bulls are still in control in the medium term outlook on this. You might argue that there's a stochastic sell signal with the stochastics rolling over on the daily chart. Now, I'm not a big fan of the stochastics, certainly on the upside on this bull run. They don't seem to work all that well. They certainly, by all means, use it as a buy signal on the down, on the support. That seems to work very well, the stochastic buy signals, but the stochastic sell signals in this run higher on the daily S&P chart don't tend to work all that well. So I wouldn't be giving too much weighting to that on this chart anyway. But as I said, I think we could now be set for a change in sentiment on this S&P chart. Certainly, you could see a bit of a pullback back towards the support band, which on the daily chart certainly comes in at around that 1810 to 1820 mark. So I'd be looking out for that in the next couple of days, as there is a bit of a correction in this S&P coming. Anyway, that's the outlook for the S&P, and I wish you good luck with your trading, and I will speak to you later.